Hi, hello, how are you? I am 100% hopeful. By blessings of the God, you are all in well. On request of my dear student friends, I have prepared this second YouTube lecture video, and it's a share capital and types of share capital. Once again, I am welcoming to my YouTube video channel. This is Dr. A B JENA, Senior Assistant Professor, PG Department of Business Management, Fakirmon University, Balasore, Odisha. So, without any delay, we will start our discussion, and you will enjoy in this video, and this video will be very helpful not only to the 12th standard students, but also this will be helpful and useful to BBA, BCom, MBA and MCom students. Let's start our discussion. The share capital. The share capital, what is this? So, share capital, it's the combination of two words, share plus capital. What is the meaning of share and what is the meaning of capital? So, before discussing the share, what is the meaning of capital? Capital is something, it's the sum of money or money's worth which is invested by the owner of the business. And what is the meaning of the share? Share, in simple language, share, the capital of the company is divided into a number of equal parts. For instance, suppose the capital of the company is rupees 1 lakh and it will be divided into 10,000 units. So, for share, this will be rupees 10. So, in this way, the company will issue the share to the general public to get the capital or the fund. So, total share of the company is 10,000. So, 10,000 into 10 is equal to how? 1 lakh. So, capital of the company is 1 lakh. So, the question arises. So far as when we are talking about the share is associated with the corporates. Corporate means company. So, company will need the capital. As we know, human wants are unlimited and the company is an artificial person. And it's the nature of the law. We are interested whether it may be the natural person or artificial person. They are interested for the growth, development, modernization, expansion, etc., etc. So, for these purposes, company will need the capital. So, the capital will be required for the long term purposes, for the medium term purposes, as well as the short term purposes. So far as for the investment into long term purposes, it is known as long term investment decision, or the fund is required for the investment into land, building, machinery, etc. For the short term purposes, so company will need the working capital for meeting the day-to-day expenses of the business. Okay. So, share capital, it's nothing but whatever the amount received from the selling of shares. So, company will need the additional fund in which a company will get the additional fund or additional capital. So, in this situation, in this case, company will issue the share to the general public to get the right amount of the capital. Whatever the amount received from the selling of the shares by a company, it's known as a share capital. Hope, dear friends, you are clear. Now, the shares capitals of the company is divided into 9 parts. Just I am reading out. So, in authorized capital, or the synonyms of authorized capital is also known as the registered capital, and it is also known as the nominal capital. Second one is issued capital, third one is unissued capital, fourth one is unsubscribed capital, fifth one is called capital, next one is uncalled capital, paid up capital, unpaid capital, unpaid of capital, and last but not the least, it is known as reserve capital. Reserve capital. So, we will discuss one by one. So, what is this authorized capital? It is also known as the registered capital, or it is also known as that is the nominal capital. What is this? Authorized capital is the maximum capital which a company can issue the share to the public. We know there are two important documents of a company. It's known as that is the Memorandum of Association. Another is its Articles of Association. Memorandum of Association, it stands MOA. It's okay. MOA. It stands for Memorandum of Association. Second one, it's AOA. AOA, it stands for Articles of Association. What is this? So, Articles of Memorandum of Association, it's the constitutions of a company. Constitution of a company, and in Memorandum of Association, one clause is there. It's known as a capital clause. In capital clause, company will mention what would be the maximum share capital of the company. For instance, suppose you have 3,000 rupees in your pocket. You can spend how much? Maximum 3,000. Beyond that, you cannot spend. If you will spend more than 3,000, you have no money. Maximum is that is the 3,000. You can only spend 3,000. Similarly, okay, a company can issue maximum share capital or maximum share capital. Let's take an example. XYZ company. XYZ company maximum share capital is, let's take an example, is 100 crores. So, XYZ company can issue maximum 100 share capital to the general public. Beyond that, a company cannot issue. Yes, provision is there. Company can issue more than 100 crores by amendment of a Memorandum of Association. Then the capital clause will be amended. Then XYZ company can issue more than 100 crores. Okay, dear friends, come to the second one category. It's a issued capital. The name says the capital will be issued to the general public. What is this? The part of the authorized capital. It's a the same example. Suppose authorized capital is how much? 100 crores. 100 crores. The company can issue. Let's take an example. Is that it is 80 crores. So here the 80 crores will be known as the issued capital. Once again, I will repeat, the part of the authorized capital which a company, XYZ company, can issue the share to the public for subscription. I hope you are clear. If any doubt, dear friends, you can comment I can edit, I can modify, or I will welcome your comments or criticism. Come the third one, it's the unissued capital. What is this? The part of the authorized capital which is not issued to the public. So 100 crores minus 80 crores is how much? It's 20 crores. So 20 crores will be treated as unissued capital. I am sure that you are clear. Then come to the subscribed capital. What is this? Subscribed capital is the part of the issued capital. Part of the issued capital that has been sold to the public. XYZ company will sell the issued capital to the general public. The public, who are the public? You, myself, your friends, my friends, so they are the public. Next one is, it's the fifth one, it's called up capital. What is the called up capital? The part of the subscribed capital which a company asks to shareholders to pay. Okay, let's take an example. Here the one price share is rupees 10. So company will not call at a time 10 rupees. At a time 10 rupees. So company will, okay, so in this way, rupees 2, rupees 3, rupees 2, again rupees 3. So first 2 rupees it will be the application money, and second 3 rupees will be the allotment call. Next 2 rupees will be what? The first call, and the last 3 rupees, this will be treated as the second and final call. So company, as for the requirements of the company, then the capital will be called from the shareholders. Called up capital, suppose XYZ company has called rupees 3. It's a, what is this? It's a allotment call. It's a known as, what is this? Allotment call. So in this called up capital, so rupees 3. So when the company will call the call amount from the shareholders, it's known as, that is the application money, and its time company will call the allotment call. Next one is uncalled capital. What is this? It's the part of the subscribed capital which a company has not called for payment. Okay, come to these examples. Till yet XYZ company has not called rupees 2 and rupees 3, and this will be treated as, what is this? Uncalled of capital. Dear friends, now you are clear. Next, come to paid of capital. This is the part of the called of capital, and amount of capital has been received. Yes. So exactly what the call amount the shareholders have already paid to the company, it's known as, that is the paid of capital. And it's the opposite, or the reverse is, what is this? Unpaid of capital. What is this? This is the part of the called of capital, and the amount has not been received from the shareholders. Means here the shareholders are the defaulter. Company has already called, but due to some problem, the shareholders has not paid. It's known as, what is this? It's the unpaid capital, or we can say it's known as, that is the calls in arrear. Calls in arrear. Last but not the least, another types of reserve capital is, what is this? It's a reserve capital. It's also known as, what is this? Uncalled of capital. So reserve capital is called up at the time of liquidation of the company. At the time of liquidation of the company, here the uncalled capital is, that is, so it's the first call, and it's, what is the last one is, that is the second and final call. So this call will be called by the company to make the payment to the creditors. So at the time of liquidation of the company, the reserve capital will be called off. So I hope you are all in conceptually you are clear. So thanks a million to all of you. So I will request you, kindly you like it, kindly you share it, kindly you forward it, kindly you subscribe it, and in the description link, so the PDF of this video lecture can be available. Once again, I am also requesting you, kindly give your valuable suggestion and criticism, and your suggestion and criticism will be helpful for preparation of next video. So in next video, so I will discuss about the share capital as well as the debenture capital, the types of shares and the types of debenture, and the difference between the equity share and preference share, and the difference between the share and debenture. Thanks a lot. Thank you.